Mark your calendar right now because July 29th is not a normal deposit day. If you're on old age security or the guaranteed income supplement, the number that lands in your account that morning will not match the number you got in June. Not because of a mistake, not because something's wrong with your file, but because three separate changes are hitting your payment at the exact same time, and almost nobody has told seniors this is coming. Some of you are about to see more money. Some of you are about to see less. And if you don't know which one applies to you, you're going to open your banking app on July 29th and panic for no reason, or worse, miss a problem that actually needs fixing. So in this video, I'm going to walk you through all three things changing in that one deposit in plain English, no jargon, so you know exactly what to expect before it lands. Stick around to the end, because the second one is the one almost every senior misses completely, and it could mean real money either staying in your pocket or quietly disappearing from it. Hello, I'm James Cardewell. For the past 11 years, I've been researching Canadian retirement programs, government policy, and the financial issues that affect seniors. Today, we'll break down what this latest development could mean for you. I want to be clear before we start, I'm not a financial advisor, I'm not affiliated with the government, and I'm not here to scare you. What I am here to do is translate what Service Canada and the CRA are doing into something you can actually use. None of what I'm about to explain means you're in trouble. It just means it's time to pay attention. So here's exactly what's happening. On July 29th, three separate mechanisms all reset at once. I'm going to walk you through each one in order, starting with the one most people already sort of know about, and ending with the one that catches the most people off guard. The first thing changing is the regular OAS increase. Every quarter, old age security payments are adjusted based on the Consumer Price Index to keep pace with the cost of living. This quarter, that adjustment comes out to roughly 1.2%. Now, 1.2% doesn't sound like much on its own, and if this were the only thing happening on July 29th, most of you wouldn't even notice it beyond a few extra dollars. Let me give you an example of how this plays out in real life. Take a senior named Harold, 68 years old, living in Nova Scotia, collecting a standard OAS payment. Before this adjustment, Harold was receiving a set monthly amount. After the 1.2% increase is applied on July 29th, his payment goes up by a modest but real amount. No paperwork required, no application, nothing he needs to do. It's automatic, it's built into the system, and it happens to every OAS recipient at the same time. This part is genuinely good news, and it's the easiest of the three changes to understand. But it's also the reason a lot of seniors are going to assume that's the only thing changing in their deposit, and that assumption is exactly where the confusion starts. Because this 1.2% bump is about to run into two other adjustments happening in the exact same deposit, and depending on your situation, those other two can either add to this increase or wipe it out completely. Here's the one that catches almost everyone off guard, and it's the reason I asked you to stick around to this point. If you receive the Guaranteed Income Supplement alongside your OAS, your GIS amount doesn't just sit there year after year. Once a year, it gets fully recalculated based on the income you reported on your previous year's tax return. And this July, that recalculation uses your 2025 income. Here's why this matters so much. GIS is designed for low-income seniors, and it's calculated on a sliding scale. The less income you had last year, the more GIS you get. The more income you had, the less GIS you get, sometimes down to nothing at all if your income crossed a certain line. So this isn't a fixed adjustment like the OAS increase. This one moves in either direction, and it can move by a lot. Let me walk you through two seniors, same age, same province, completely different results. First, meet Eleanor. Eleanor is 71, lives alone in Ontario, and in 2025 she had a lower income than the year before because she stopped a small part-time bookkeeping job she used to do from home. When her 2025 tax return gets used for this recalculation, her lower reported income means her GIS goes UP. Combined with the OAS increase, Eleanor's July 29th deposit is noticeably higher than her June deposit. She didn't do anything. She didn't apply for anything. The system just caught up to her lower income and adjusted in her favor. Now meet Gerald. Gerald is 70, also in Ontario, and in 2025 he cashed out a portion of a small workplace pension, which bumped his reported income for that year. When that 2025 return feeds into this recalculation, Gerald's higher reported income means his GIS goes down, in some cases by a meaningful amount. Combined with the small OAS increase, Gerald's July 29th deposit could actually be lower than what he received in June, even though OAS itself went up. Same day, same two programs. Two completely different outcomes based entirely on last year's tax return. This is the part nobody warns seniors about. People assume cost of living increases only ever mean more money, and for the OAS piece, that's true, but GIS doesn't work off cost of living. It works off your income from the year before, and that number resets every July. If your income went up in 2025, even temporarily, even from something like an RRSP withdrawal or extra part-time hours, expect your GIS portion to shrink. If your income went down, expect it to grow. Either way, the number on July 29th will not simply be last month, plus a little. Let me give you one more example because there's a version of this that surprises people even more than Gerald's situation. Meet Doreen, 69, living in Manitoba. Doreen didn't take on any extra work in 2025, and she didn't touch her savings. But her late husband's small survivor pension was reported slightly differently on her 2025 return than it had been the year before, due to how the pension provider issued the slip. That small reporting difference was enough to nudge her income into a slightly higher bracket for GIS purposes. Doreen's July 29th deposit came in lower than she expected, not because anything changed in her actual day-to-day finances, but because of a technical difference in how income was reported on paper. This is exactly why I tell people, don't just remember roughly what you earned last year. Actually pull the notice of assessment and look at the number the CRA has on file, because that's the number driving your GIS, not your own memory of your finances. And to be clear, none of this means the system is against you. GIS recalculating every year based on real income is actually the fairest way to run an income-tested benefit. The problem isn't the mechanism, it's that nobody sends out a plain English heads-up before deposit day telling you which direction to expect your number to move. The third change is the one that applies to a smaller group, but for that group, it matters a lot. This is the Oas Recovery Tax, sometimes called the OAS clawback, and it also gets recalculated using your 2025 income tax information, landing in this same July 29th deposit. Here's how it works. If your net income last year crossed a certain threshold, the government starts recovering a portion of your OAS payment, deducted directly at the source before the money even reaches your account. This threshold updates every year, and the amount recovered is based on how far above that threshold your income landed. Let me introduce you to Patricia. Patricia is 73, lives in British Columbia, and has a modest workplace pension on top of her OAS. In 2025, a one-time RRIF withdrawal pushed her net income above the recovery threshold for that year. Because of that, starting with the July 29th deposit, a portion of her OAS payment will be automatically deducted before it reaches her account, based on how far over the threshold her 2025 income was. Patricia is not being penalized, and she's not in trouble with the CRA. This is a standard automatic adjustment that applies to a specific income bracket, and it resets every single year based on the most recent tax return. If her income goes back down next year, the recovery amount goes back down too or disappears completely. But if she wasn't expecting it, seeing a chunk taken off her OAS in the same deposit that was supposed to include a cost of living increase would be a genuinely confusing, even alarming moment. It's worth understanding how this recovery actually gets applied, because a lot of seniors picture it as a one-time penalty, and it isn't. Once your income crosses the threshold in a given tax year, the recovery amount gets spread out and deducted in equal portions from your OAS payments across the following payment period, which is exactly why it shows up quietly inside a deposit like this one, rather than as a separate letter or a lump sum bill. It's baked into the payment itself. And this only affects a specific income bracket. Most OAS recipients never cross this threshold at all, so if your income has stayed modest, this third item likely doesn't apply to you in the slightest. But if you had any unusual income event in 2025, a pension buyout, a property sale, a larger than usual RRIF withdrawal, this is the one to check for specifically, because it's the one most likely to catch someone by surprise. There's also a common question I hear on this one. Can this be appealed or adjusted if your income was a one-time event and won't repeat? The honest answer is that the recovery is based on the tax year that already happened, so for that specific deposit, the calculation stands. But it resets every year, So if 2026 looks more like your normal income level, expect this recovery amount to shrink or vanish on next year's recalculation. This isn't a permanent flag against your account. It's a snapshot of one specific tax year, applied to one specific stretch of payments. This is exactly why I wanted to cover all three of these together, because on paper, July 29th looks like one simple deposit day. In reality, it's the collision point of three completely separate calculations, one that always adds a little, one that can add a lot or subtract a lot depending on your 2025 income, and one that only subtracts and only for people who crossed a specific income line. So when you put Harold, Eleanor, Gerald, and Patricia side by side, you can see why four different seniors, all receiving the exact same two programs, could open their banking app on the same morning and see four completely different results. Some go up more than expected, some barely move. Some actually go down, even with a cost of living increase built in. None of these outcomes mean a mistake was made. They mean the system did exactly what it was designed to do, react to your specific 2025 income, and there was no notice sent out clearly explaining that all three of these land on the same day. So here's exactly what to do this week, before that deposit arrives. Number 1. Pull up your 2025 Notice of Assessment from the CRA and take a quick look at whether your reported income went up, went down, or stayed about the same compared to the year before. That single number tells you which direction your GIS is likely to move. Number 2, if your income went up in 2025, even from something temporary like a withdrawal or a short-term job, brace for a smaller GIS payment and don't assume something's broken when you see it. Number 3, if your net income was close to or above the OAS recovery threshold last year, check your CRA My Account or your most recent OAS statement for any note about a recovery tax deduction, so it isn't a surprise on the 29th. Number 4, write down what you actually received in June so you have a real number to compare against on July 29th, rather than trying to remember it after the fact. Number 5, if the number on the 29th looks wrong to you, meaning it doesn't match any explanation we just covered, that's when it's worth calling Service Canada directly, because at that point it could genuinely be an error worth flagging, not just one of these three normal adjustments. And here's a simple way to actually check this yourself before the deposit lands, rather than waiting and guessing. Log into your My Service Canada account online and look for your most recent OAS and GIS payment breakdown. It will typically show you the gross amount before any recovery deduction and the net amount after. Compare that against your June deposit side by side. If you see a recovery tax line item appear that wasn't there before, that's item 3 at work. If your GIS portion moved up or down noticeably while OAS only moved by a small, consistent percentage, that's item 2, the annual recalculation, doing exactly what it's designed to do. Walking through it this way takes maybe 10 minutes, and it turns a confusing deposit into 3 numbers you can actually explain to yourself. 20 days from now, this deposit is landing in millions of accounts across the country, and most of the people receiving it have no idea these 3 things are happening at once. If this video helped make sense of it for you, do one simple thing before you go. Share it with a senior, a parent, a neighbor, someone who's going to open that banking app on July 29th and might not understand why their number moved. You don't need to explain all 3 of these changes yourself. Just send them this video. That's it. Take care, and I'll see you in the next one.